G'day, guys, and welcome to the Thunder from Down Under podcast. I'm your host, Graham Solomon. And remember, go to the YouTube channel, Graham Solomon Thunder from Down Under, and belt that subscribe button. Hit the bell for notifications so you can be notified when we go live, like right now. And I've got my special guest that I'll introduce now. He is a man that's been in the funding and lending business for over 40 years. He's the owner of his business, Everest Business Capital, and his name is Fred Shatzoff. And welcome to the podcast, Fred. Great to have you here.
Good afternoon, Graham. Thanks so much for having me on the podcast. It's a pleasure to speak with you today, and I hope everybody finds what we talk about informative.
Well, I mean, that's awesome. Just with that intro, Fred, you're 40 years. I mean, I don't know if I've spoke to anyone that's been in an industry for 40 years on the podcast so far. So that is a lot of experience. So I guess the first question I've got to ask you is, way back when, how did you actually get into it? How did you get into the lending space and the finance space?
Well, what actually happened was when I graduated college, I had a degree in accounting. I did that for like 2 years. I just didn't like being confined in an office. And then I saw a sign at a real estate office that they were looking for real estate agents. So, I went in there and, I went to school and I got my real estate license and I sold real estate for a few years. And then, a couple people said to me, well, you know what, with your accounting background, you should probably go into the lending industry. So that's kind of how I got into the lending industry. When I first started out, I did regular Fannie Mae, Freddie Mac, FHA, VA loans. I mean, at that time, we didn't have computers. We had to take all the applications by hand. We had to literally get all sorts of documentation from the people. A file would be 6-7 inches thick. You'd have to get W-2s, pay stubs, bank statements, verify everything. It could take probably 60 days to close a loan. As time evolved, we started to be able to take the loans on a computer and have computerized underwriting and things along those lines. And, then what happened, I started to get calls from people, they wanted to buy investment property. So I started doing that. And as time went on, I discovered there was an easier way to do an investment loan. I mean, when I tell you that these loans, they're a piece of cake, people think it's a difficult loan. I mean, first of all, you have to have an LLC. You can literally form an LLC today, buy a property tomorrow. We don't need to show proof of income for the LLC. We don't need any income documentation. You do have to qualify credit-wise. So what we mean by that is you have to typically have a 660 to a 680 credit score, no bankruptcy or foreclosures. You have to be able to prove that you have the assets for your down payment and everything along those lines. And, then the property has to qualify, whether it's a fix and a flip loan. It has to meet certain criteria to get that type of loan. Or if it's a plain investment loan, they're going to look at what is the rental income on the property, and they're going to qualify you based upon the rental income. So it's very easy. So what's taking the longest right now, because of the volume of the real estate market, is just getting the appraisals back. But it's very, very, very easy. I mean, some people think because they hear an ad on late night TV that they can go in with no money. And sometimes people call, they only have $500. Well, that's not going to work. You have to have some skin in the game. I mean, truly the only loan you can get with no money down is if you're a veteran of the United States Armed Services, and that's an owner-occupied property, Or you could do an FHA loan. You need 3.5%, but that again is an owner occupied property. So, sometimes people don't understand that, but you have to have something to get into the game. You don't have to have perfect credit, but you have to have halfway decent credit. And, sometimes people will bring in a partner to work with them, which a lot of times, if you've never done something before, do that. Bring in a partner for the first few deals. It's like when you were a kid learning how to ride a bike. You need some help in the beginning. The same thing here. So I try to take the consultative approach and, go over everything. And sometimes if somebody doesn't have the money, I try to back in and say, well, this is how much money you're going to need to be able to, you know, do this property. Do you think maybe you could get a partner to do that? Or sometimes I might say to somebody, you know what, you don't really have a lot of money. What about maybe starting out doing wholesaling and building up your, cash so that you can, get into bigger things because you got to start someplace. I mean, unless of course you have a silver spoon and you were given $1 million, then it's a little bit different. But
Yeah, well, that's it,
that's
isn't it? Yeah, that's you know, not all of us. There's not many of us with that. So
no, there's not many people with that at all. So what I am is I am a broker. So I represent a number of different lenders, and we lend nationwide for the most part. There's only a few states we don't lend in, like North Dakota, South Dakota, but there's not much in some of those areas. And, I try to vet out the lenders as much as I can, before I do business with them because you're always getting phone calls from different people. But, you got to vet them out a little bit. And sometimes you even have to take a chance once in a while and say, all right, I'll give you a shot and see how you do. I mean, look, for the most part, I mainly deal with 4 or 5 different lenders because everybody is basically about the same. But the difference is, are you able to talk to the lender if you need an exception? Are they going to call you back and give you the service that you need? It's much like I say to people, look, you want to call me 8, 9 o'clock at night because sometimes I deal with somebody on the West Coast. By all means, do that, you know. But if you're going to call me 1 o'clock in the morning, I'm not going to answer your phone. I mean, I've had once in a while you get somebody, I don't know whether they're drunk or whatever. A guy called me one time. I see my phone ringing 1 o'clock in the morning. The guy leaves a message. He wanted $30,000 the next day. Well, I'm not a private person. I don't know you, let alone there's really no money for the lender in a loan for
was it?
thirty
Do you think he
thousand
may have
dollars.
been? Do you think he may have been in Vegas, Fred? And he was
Maybe,
looking for 30K for the next day to make
yeah,
back his
maybe,
losses.
right? You never know,
Yeah,
right?
yeah.
So,
So
but
yeah,
so that's kind of you know about my background, how I got into the business, and look, I like helping people, and there's always people that need money. I
yeah,
mean, whether the market is good or bad, there's always going to be people buying real estate. And the investors obviously want to try and get a good deal on the property. Typically, they're looking for somebody who's maybe gotten divorced or fell behind on the mortgage or inherited a house and doesn't owe any money. Those are typically the kind of properties people are going to buy on the investment side. And, sometimes they're going to buy them turnkey rental or they're going to buy something that they want to add value to it. And that's where the numbers have to make sense.
yeah. That's a really good point because it doesn't matter whether it's a hot market, a cold market, a warmer. Real estate always changes hands because life happens, circumstances happens to
Yep,
people, and
exactly.
especially like you said in the investing world where people need maybe to move the property quicker, they may take a discount. The property might be distressed. So that's a really good point. I just want to go back to what you were saying earlier about. I mean, you've been in the business 40 years, so first of all, you talked about the changes that's happening in the business. So you must be, although technology can be frustrating sometimes, it's made it a lot easier not to have all those archive boxes piled up in the back room and all that paperwork. But along the journey, I mean, obviously being in that profession, you would have collected a whole heap of people that, attorneys. You'd have a lot of contact with people around finance, around real estate as well, wouldn't you? So not only can you help people with loans and advise them with finance, you've actually probably got like people that you can put them onto with other stuff as well. Even
Correct.
yeah. So that's what I mean. Like if someone's listening and they're thinking, "Well, I'm getting started," if they reach out to someone like you with finance, with lending, someone like you that's been in the business for a long time can also put them onto other people in the industry that can help them out in other areas as well, can't you? That's something that
Correct. I mean, suppose somebody needs a contractor, a plumber, or an electrician. They need a title company. Maybe they need a CPA. Maybe they need an attorney. Maybe they want a good real estate agent to work with. Maybe they want to buy a property that's going to be their primary residence. Okay. I know lenders that I can refer them to, because basically all of these loans that I deal with are all non-owner occupied. So, and again, for the most part, we do the loans nationwide. And the beauty about it is, what? I don't know the last time I met with somebody face to face. It's not like when I first got in the business and I'm here in New Jersey. Yeah, once in a while I might go meet with somebody in Pennsylvania, but for the most part, most of the business was New Jersey. Sometimes it was in New York. Now it's different. I have clients that buy in Florida, they buy in Cleveland, they buy in Texas. So, it's makes it a lot easier, that's for sure.
yeah, that's another great point. Is you know you talk about the days when it was all paperwork and then computers come in, but now we're at the next level, aren't we? I mean, you can do face to face with people even internationally, like we're doing now. You can do it from state to state, and I guess too, you've probably since that age has come in, your network's grown nationwide,
Right.
hasn't it? Like you said, like you've got connections all over the country now. So not
Right.
just with
Right.
lending, but once again with the services that surround lending, you've probably set up a bit of a network.
Correct. And if I don't know somebody, I mean, certainly, I can ask some of the investors that I deal with. I have a network on LinkedIn. I have a little bit of a network on Facebook. So, I can, if I don't know somebody specifically, I can always ask somebody and find somebody if somebody needs some help in a particular area, especially that has to do with real estate.
Yeah, yeah. All right. Well, let's get into a bit of meat and potatoes here. We'll talk about sort of the particular funding and
Okay.
lending. Um,
Sure.
I was just I was thinking about initially first talking to you about like if someone's watching and they say, well, I do this, I do a bit of wholesaling, I do a bit of buy and hold, and that you'd have specific type lenders that would suit each particular model differently, would you? You've got different
Correct.
people. Yeah, yeah. So could you just explain that a bit, Fred, just
Sure.
on the fact of say, like if someone was a wholesaler, but they decide they want to buy some rentals, you'd be able to point them in the right direction that way, would you?
Sure. I mean, for the most part, there's really three types of main loans that we do, and we'll start with the residential side. So first we have a fix and a flip loan. Now, in case someone's not completely familiar with what that is, that's basically you're buying a property that is run down, needs work, and then you want to turn around and you want to sell it for a profit. So we can give you some money to buy the property. Then we can typically give you 100% of the value of the repair. So normally down payment is anywhere from 80 to 90% of the purchase price, and it's 100% of the repairs. And then the maximum loan is going to be 70% of the ARV. Okay, so That's the first type of loan that someone is going to want to get. So let me just give somebody a quick hold on, because I put some numbers together here, and I'm going to give somebody a quick scenario on, let's say, a fix and a flip loan. So suppose they found the property for $150,000. The repairs were $40,000, and the after repairs $260,000. So basically, what we're going to do, we're going to take the purchase price 150, multiply it times 90. That's $135,000. Then we're going to give them the 135 plus the 40. So we're going to give them a total loan of 175. We're going to divide that into 260. That's 67.3%. So that number is below 70 or 75%. So the property would qualify. So as long as they have, the credit, and they have money for the down payment and the closing cost, and they have an LLC, it's going to work. So that's one type of loan. The next one is what we call a rental loan, a turnkey rental loan, where there's already tenants in the property. Now, with that one, typical down payment is 20 to 30% of the purchase price. It depends upon what the rental income is on the property versus what the principal, interest, taxes, and insurance on the property is. So that's what they would look at to qualify there. Again, as long as they have the down payment and the closing costs, they're going to be good. Now there they can get a 30-year fixed. On the fix and a flip, it's a short-term loan. Typically, it's up to 13 months with no prepayment penalty. But obviously, you want to get in and out of that property as quick as you can, 3 to 4 months. I mean, sometimes it might take you a little bit longer if it's a very big rehab, okay? The next one is what we call ground up construction, where you're going to buy a piece of vacant land and you're going to, build a house on there, and you're going to sell the house. Now, that's typically for a more experienced investor. That's typically for someone who's a contractor who's built the number of homes. Typically, they want to see that you've done, 4 to 5 of those, because that's a lot more difficult, because you have to get an architect to draw the plans. You have to get approvals from the town. They have to come in. They have to do inspections as you do the work. So that's really more for an experienced investor or someone who happens to be a builder. That's really not going to be for a new investor. The other two types of loans, you don't have to have experience. Obviously, the more experience that you have, on the fix and flip, the better of a rate that you're going to get. Now, as far as a turnkey rental, the experience really does not matter that much. It's more, does the property qualify? Now let's break out the rental a little bit more, and I'll give you an example. I have an investor who owns 3 properties in Maine. Okay. Now, he has no mortgage on all 3 of these properties. So basically, what we're going to do is we're going to do what we call a portfolio loan, which basically means that the loan is going to be against more than one property. And the reason they do that, it saves them a little bit on closing costs. They still have to do an appraisal, but a lot of times they can get a little bit more leverage on that. Again, they have to qualify credit-wise. We have to look at what is the rental on the property. So that's typically on residential 1 to 4 families, which for the most part is my niche. Now, I can help somebody who may want a loan on a mixed use property, okay, or commercial. Now, the true definition of Commercial, so everybody is clear, is anything above a 4-family is considered commercial. Even if it's a 10-unit apartment, that's considered commercial. Now, mixed use is, let's say on the first floor, there's a pizzeria, okay, or a beauty salon. And then on top of that, maybe there's 4 or 5 apartments on top of that. That's considered mixed use. And a lot of times, mixed use is owner occupied, but it's not a primary residence because the pizzeria is there and he has his business there. And he doesn't live in the pizzeria. At least we hope not. We hope he's not open 24 hours a day, but he could be, probably not. But so that's what we call a mixed use. And a mixed use is typically going to be 20 to 30% down. The same thing with commercial, because every property is different. Sometimes people, well, they want to know what the rate's going to be. Well, I can't really tell you what the rate is because I need to know about the property. Does the property qualify? That's going to determine what your rate's going to be. The same thing on a fix and a flip. What is your level of experience? That's going to determine, whether you need 10% or you need 20% down. It's going to determine what your rate's going to be.
What I was going to ask you, Fred, like so that you get the longer term ones with the buy and holds, the
Correct.
fix and flips are, you said about 16 months, around 16 months for those. How
Right.
about is there something short term for like wholetailing, which is like you close on the property, you clean it up quickly, and you put it back on the market, a month, 2 months, 3 months? Is it,
Okay.
is there
Well,
something
I do have some options for that.
yeah.
What I can typically do for someone like that is get them what we call an unsecured line of credit. Now, when we say unsecured, it's not attached to a property. Unlike a home equity line of credit, that's typically a first or a second position on your home. With this, it's unsecured. Typically, it's a 0% interest for anywhere from 9 to 15 months, and it's a revolving line of credit. Now, the way that works is the following. The lender typically wants to see that you have at least a 700 credit score. You have to have at least 5 years worth of credit history, no lates, no bankruptcies. They want to see that do you have a couple of major credit cards, and their definition of a major credit card is with a major bank such as Chase, Wells Fargo, Citibank, Bank of America. They want to see that you have at least a $5,000 line of credit with a couple of these. So you can't really just have a $500 line of credit on something like that. And they want to see low credit utilization. Typically, they want to see 30% of what you have available. So if you have $10,000 available, typically they want to see that you owe $3,500 or less on that. So if somebody hypothetically had $10,000, we might be able to get them a $50,000 line of credit. That line of credit is anywhere from $25,000 typically to $125,000. And you can use that line of credit over and over. So I have some real estate investors, what they will do, they'll use that if they need supplies on a rental property, or they need supplies, while they're renovating a property. Now, the big plus about that's in the name of the business. So therefore, their credit score is not going to drop because of credit utilization on their personal score. It doesn't matter. The only time that it becomes a problem is if you don't pay it. But as long as you pay it, that's how it works. And, you're building up business credit. And a lot of times what will happen is they'll give you a larger line of credit. Now, that typically takes about 2 to 3 weeks to get that line of credit. But what we do is we pre-qualify someone before they get that line of credit. And the way that we do it is we ask them to send us their credit report, whether it's through Credit Karma so that there is no inquiry. Or if they have a credit monitoring service, then anywhere from 24 to 48 hours, we'll come back, our underwriter will review it and, say this is the amount of credit that you can get. If they decide to move forward, we start the process. Now, we charge a one-time fee, to get that. So our fee is 8.99% of whatever the line of credit is. There's a lot of lenders out there that will do it as a 15% fee. But what happens is that fee comes right off the line of credit, and they only pay it if we're successful. And that's why we pre-qualify somebody. So if they got a $50,000 line of credit, the fee is about $4,450, and they can use that money over and over, and they can use it for whatever they want. A lot of times they'll say to people, they'll ask, well, do I have to get your permission to use it? No, you don't have to get my permission or the lenders. I said, honestly, if you want to go to Atlantic City and you want to gamble the money away, by all means do that. I don't recommend it, but you can do whatever you want with it.
Yeah.
So
Yeah. So that line of credit that you talk about, that could be used. That could be used also, like someone that does Airbnb arbitrage. So when they secure a property and they get it in place, they may need to spend a couple of grand on furniture, a couple of things to set up, and then once it starts cash flowing and they get their money back, they can put it back in, and they can just use that as a bit of a I guess like an overdraft, just to be able to use it to purchase things until it starts cash flowing. So
correct.
So you've sort of covered sort of all areas. You've got long-term loans there. You've got the shorter-term ones for fixed and flips. And then that one is a real short-term one, which actually you can use for wholetailing. I mean, you could even use it as a wholesaler. You could use it if you had a really good deal and you needed to put a bit of EMD in yourself. You could do that yourself and then take it, obviously put it back in there. So those short-term loans are really good for, I mean, it can be used by, say, wholesalers and wholetailers as well. So,
correct. Absolutely.
So you're painting a picture of there's different loans for different time frames and different I guess genres of investing that you're doing. So that's awesome. Thanks for breaking that down for us, Fred. That's cool.
You're very welcome.
The next question I had for you was, I hear all this stuff about, private money, hard money, all this sort of stuff. For people that, I mean, a lot of people that have been in the business would already understand it, but for someone that's fairly new that's watching this, would you be able to just give us a quick sort of overview of the difference between hard money, private money,
sure,
gap lending, all that sort of stuff?
Sure, absolutely. So there are a lot of what we call hard money lenders out there, and they call themselves private lenders. Now they are and they aren't, because here's the true definition of a private lender. It's a private individual who is loaning you their own money. They set their own terms as far as lending you the money. Some of them run credit, some of them don't. Most of them don't do an appraisal. Like I'll give you an example. I have a guy here in New Jersey, and this guy is a true private individual who loans out his own money. Now, he may have a bunch of investors that have invested with him. It really doesn't matter. But his criteria, and he does strictly the fix and a flip, he wants 20% of the purchase price. He'll do 100% of the repairs, and he typically wants a 70% ARV. Give me 1 second here. I forgot to do that. Hold on.
That's all right. I'm just going to go to the chat and have a look at the chat. While you take care of that. I thought there were some questions, but it's actually a lot about, I'm assuming it's about my hair. It's dude, love the hairdo. Did you stick your finger in the electric socket? So I don't know who that is. I can't see who that is, but yeah, your hair looks nice. So thank you, everybody. If you've got any questions for Fred, whack them in while we got the chat going, and Fred
Okay.
will answer them as we go.
Sure,
And
but
but
going back to this individual. So this is a private individual. So what he does, he wants to go and see the property. He just wants to walk around the property because he knows the values in New Jersey. And from there, he'll determine and he'll say yes or no to the deal. He doesn't ask for any financials. He doesn't run any credit as far as that's concerned. Obviously, he has fees, his rates are a little bit higher, but, that loan can close in a week. Okay. So that's a true private individual. Okay. There's also other people that have self-directed IRAs, and they loan out their money to real estate investors. In fact, I know someone that does that, and the way that they work is the following. If you need money for a particular real estate project, they have every other Friday, they have a networking meeting where someone can go on there. They give you maybe 5 minutes. You can pitch your deal, put your information in the chat in a Zoom. And if somebody's interested in loaning money to you, they will get back to you, and they'll make an arrangement with you. Now, I can help somebody with that. I am gonna charge a fee for facilitating and helping to arrange that loan. Some of these people might require an appraisal. Now, if we go to hard money, okay, those are the people that do a fix and a flip loan. Now, there they do run credit. There they do an appraisal. And a lot of times some of those people do have money that do invest with them. But, they're loaning out their own money. Some of those are sold on Wall Street as securitized loans. So that's really a hard money loan. Okay. A real private loan is a private individual. It's like me loaning money to you. That's a private loan. These other
yeah,
companies, they say they're private lenders, but they're really not. A lot of people get a little confused with that, but that's, basically what it is. I mean, look, some of the advantages with a hard money, you have the less criteria to meet. It's good for buying a distressed property. It's a relatively fast loan closing. You have flexible payment options because on the fix and flip, it's an interest only loan, and you pay as you borrow the money. So if they gave you $100,000 to buy the property, initially paying interest only on the $100,000, and then they give you money and advance you money, then you're going to pay a larger payment, because on the fix and the flip, they reimburse you as you do the repairs on the property. So that's typically the way that works. So that's, for the most part, the main difference.
yep, yep. I just had a question coming. I'm assuming this is for a fix and flip. I'll read it out to you, Fred. Does he want 20% of the property as is, or the ARV? So I think that's referring back to what you were talking about earlier with 20% down, or
Right. It's typically 20% of the purchase price.
yep,
Okay.
yep,
So, and the difference is, you could be buying the property at 70, but the as is value is 100. They're going to base everything based upon the 70,000 purchase price, and the maximum ARV is typically 70 to 75%.
okay, no problems. All right, cool. All right. I just wanted to just sort of break down a little bit too. Like, I ring you up, I say, Fred, I want to, I want to get some finance. We meet and everything, and I tell you my circumstances. do you prepare me? Do you say, look, you got to get this stuff prepared first, Graham? Is there a certain thing that you'll tell me to get prepared before we go and start looking for lenders so that you know that I'll qualify? Do you have sort of a system, or is it a case by case thing?
Well, for the most part, if someone calls me up and they've never dealt with me before and they've never done this before, I'll typically explain to them all of these loans are strictly to an LLC, and I'll ask, "Do you have an LLC?" If they say yes, great. If they say no, are you willing to form an LLC? Okay, or a corporation. If they say no, I want it strictly in my own name, then I can't help them. But for the most part, most of the people will form an LLC or they will have an LLC. Some people form a brand new LLC for every single property that they buy based upon the address of the property, and that's fine as well. So that's the first thing that I explain to them. The next thing I'll say is, do you have any idea what your credit is? Because typically they're looking for at least a 660 to a 680. As long as they tell me, 660 and above, I'll say, well, you're 2/3 of the way there as far as qualifying is concerned. The next thing I'm going to say is, are you trying to buy a property to fix it up and flip it? Or do you want to fix it and flip it and hold on to it for a long-term rental? Or do you want to buy a turnkey rental? So that's the next area. And then from there, I explain to them, look, you can form the LLC today, buy the property tomorrow. We don't need tax returns. So then obviously they're going to tell me what their strategy is. And I'm going to say, do you have a property in mind that you want to buy? Sometimes they do. So if they do, obviously, say, what is the address of the property that you're trying to buy? And I just want to make sure I'm going to be able to loan in that area. Okay, what is the purchase price on the property? Okay, how much do you think the repairs are going to be if it's a fix and flip? How much do you think the ARV is going to be? From there, I'll run the numbers to see if it works. And in the meantime, I'm going to say, well, how much money do you have roughly in liquid assets? What about IRAs, retirement funds, just to get an idea, make sure they have enough money for that. The same thing with the rental. What do you anticipate the rent to be? What about the taxes? What about the insurance? Now, going back to a fix and a flip, is this the first one you've done? Okay, yes or no? If they've done others, how many have you done in the last 24 to 36 months? So I get an idea of what that is. Do you own any rentals? Did you do repairs on that rental? Because that counts as well with a fix and a flip. So I kind of go through the numbers and then I can, plug everything in. I mean, I have, a program that I use. From there, I can get them a term sheet. From there, I can also get them, a pre-qualification so that they have that, because sometimes they need to show that to the real estate agent or the seller. Most of the time, I can get it the same day, if not the next day. So that's kind of, now what I also say to every investor is, look, no matter how much experience you have, what you really want to do is you really want to contact me before you go under contract so we can run the numbers. It's better to have a second set of eyes on the numbers just to make sure it works, because nothing worse than being under contract and then you contact somebody like me and you're not even close to qualifying. Okay. Now, one of the lenders that I have, what they do is, and and I really like this lender. They only run your credit once every 6 months. You don't have to worry about having a hit on your credit. They give you a line of credit typically equal to 7 times what your amount of assets are. So if somebody has $100,000 in assets that we can verify, we give them a $700,000 line of credit. Now, what that means is they may be able to buy 2 properties at the same time. We still have to do an appraisal. The numbers have to work. You can't just go write a check out of that $700,000 and buy a property. It means that you're qualified for $700,000. Now, one of the things some people will ask me, well, I have a lot of credit card debt. I'll say to them, I don't care. Do you pay it on time? Yes. Any lates? No. It doesn't matter. It's not like a regular loan where they're looking at your debt to income ratio. We don't look at that. On a fix and flip, we don't ask anything about where you work, what your income is. We ask nothing. On a buy and hold, we're looking at what is the rental income on the property versus the mortgage payment. So, that's kind of the process that I walk people through. And you really want to do that because, you want to make sure that the numbers work, and that you're going to be able to get financing. So
you sort of build a case. You sort of run the person through it. You help them with the figures. You build up sort of a, like a forensic case, a forensic accounting
correct.
case. And at least then you can both stand back and have a look at it and say, well, and then you can advise them on which way they should go from there with which particular
Correct.
lending, all that sort of stuff. So that makes a lot of sense. And that paints a picture to people that are probably watching that, I've got this idea in my head I want to lend, but where do I go? Who do I see? So if they come and see you, by the time they're finished sitting down with you, they've got this blueprint of what it looks like, and then you can advise them where to go from there. So that really clears that up. Thanks for
absolutely. No,
thanks for
you're
explaining
very,
it that way. That's
very
really cool.
welcome.
Yeah. All right, no worries, Fred. Well, that's good because we've talked about even more sort of commercial stuff, long term. We've talked about rentals, which are long term. We've talked about shorter term stuff, fix and flips, and then even shorter term from there. So there is lending for every type of situation, isn't there? It's just you've got to go and find a specialist. You've got to sit down, like you said, work it all out, work out a
Correct.
plan, and then move forward from there. But then what the funding actually does is it helps you fast track your business, doesn't it? It helps you grow your business and actually fast track it rather than trying to do it all out of your own cash as you earn it. So,
Right. Correct.
yeah,
As they say, you're better off using other people's money rather than your own on everything.
yeah.
So, that's the advantage of doing something
But you
like
have to
this.
have a plan though. Like you've just explained, you've got to have a plan. You don't just get money and throw money around. What you're saying is, if you've got a plan, you get the finances, you move forward in a calculated way. You can really fast track, say, a portfolio or a fix and flip business, or even use the credit that you can have on the side for your wholesaling business or for your
Correct.
Airbnb business. So, yeah,
Hmm.
that's it makes a lot of sense. And like people that are probably listening are thinking, yeah, well, I actually understand now. So, first step is make a bit of a plan. Go and see someone like Fred, do the blueprint, and then move forward from there and look for the right funding. So, now that's awesome. I like the way to also, the difference between private money and hard money and bank money and all that sort of stuff, the way you've explained that too, because a lot of people get confused, especially newer people. They don't understand it. And you've been able to break all of those things down pretty good for
Yeah.
us. So, no,
Now,
great information. I really appreciate it, Fred. We're sort of hitting time now. I don't know if there's anything else you want to share. For the last thing I want to
yeah,
say is I've got
there,
you.
there, there is
Sorry.
one other thing that I want to mention that people should be careful of. First of all, if a lender asks you for any money to start the application process, that's not someone you want to deal with, okay? The only money that we take from you, and we don't really take it prior to closing, is for an appraisal. And that money is paid directly to the appraiser. We don't make any money. I mean, because somebody has to go out there and they have to appraise the property, because that's really going to determine how much you're going to qualify for. So that's the only money that we collect up front prior to closing. So,
Yeah.
anybody else that asks you for anything else like that, it's just like with the unsecured line of credit, you know, we're going to evaluate everything and then we're going to start the process. But if for some reason we don't get you funding, you don't owe us anything. You don't owe us anything until you get the funding. So, that's the only thing I would precaution someone about. And, you want to make sure you have somebody that's going to spend time with you. I mean, there's sometimes if somebody's never done it, I could be on the phone with them for an hour and a half or 2 hours, and that's fine. It's better ask all your questions. I never rush anybody. Sometimes they may hang up, they may have more questions, they may email me, they could call me, whatever they want to do. But if you've never done it before, you're going to obviously think of other questions. And you know what? Make sure you take notes when you talk to the person, or write this stuff down,
Mm.
so that you have that information. But that's the only thing that I would
Yeah,
caution anybody about.
yeah. Well, we'll have that as our thunderbolt for the show. That when it comes to, if someone's asking you for money up front, and that run the other way, run, and then ring up Fred and say, Fred, I want to come and talk to you, because it sounds like that's not a standard thing, and then that should be red flags for people if someone's asking for money up front. So
Correct.
that's a really good point, Fred. Just you got to do your due diligence and just be a little bit careful. Don't rush into anything, and that's why you
Absolutely.
need to find someone that's been in the business for a while, like Fred, that's got networks, that people introduce you through networks, and it's always a safer bet. Now, up on the screen, I've got your website there, everestbusinesscapital.com. So is that how someone reaches out to you if they want to talk to you about funding? Uh,
Sure. Absolutely.
that's a good way. They can hit the website and they can get your contact details and reach out to you there.
Mhm. Correct.
And because I'm sure people that watch this, even the replay and everything, I think they'd like to have someone that they could actually reach out to, and
Sure. Let,
someone that
let,
they.
let me let me also give you my email. It's Fred at everestbusinesscapital.com, or my phone number is 551-272-9067. So they could
Okay.
call, they could email, they could go on the website, and they can email me, through the website as well with any questions. You know, don't feel silly about asking a question, because I'm sure other people may have the same question. And you know what? As they say, no question is a stupid question, because if you've never done it before, you know, um, you need to find out those answers.
Yeah, well, the only stupid one's the one you never ask, Fred. You got to ask
Correct.
questions, don't you?
Yep.
Yeah. What
Absolutely.
what I can do, Fred, is I can put in this goes directly to YouTube. So what I can do is I can put those details in the description as well.
All right,
Obviously,
great.
your website's on the page if people watch the replay. But what I can also do in the description, I'll put those other contact details, the phone number, and the email address, so people can go into the description and pick them up from there. So awesome stuff. No, thank you for coming in,
All right,
Fred.
thank you.
I think funding, lending, and that is an erroneous zone for some people, because it freaks them out. So it's good to have someone like yourself that's had 40 years experience come in and just break it down in nuts and bolts, and make it easier for people to understand. So I advise everyone to go back in, listen to uh, listen to what Fred said and how he's broken it down, and then you can confidently go forward and hook up with someone about maybe getting some funding. And we advise Fred because, like I said, 40 years, and I don't know, I haven't heard of anyone that's uh, been in it that long. So to me, that's a good sign anyway. He's obviously built up a really credible business in 40 years. But all right, well, we'll sign out, Fred. Thank you again. I
All
appreciate
right,
you
thank
coming in and
you.
spending some
It,
time with us.
it,
And
it was a pleasure.
we may reach out again and get you in one of our Thursday sessions to break down on particular topics. If anyone gets back to me with some particular questions, now we might get you in for that one so that we can really drill down. and
Okay, that would
I'll
be
reach out.
great.
I'll reach out to you later in the year.
Okay,
All right.
thank
Well, what
you.
we'll
It
do is
was a
we'll
pleasure.
sign out. Bye, Fred. Thank you, and
Thank
for
you.
watching. And don't forget, the stuff will be in the description in the YouTube video if you want to reach out to Fred. So, thanks,
Sounds
guys.
good.
And
Thank you.
because Fred's been in talking funding and lending, you guys have been thunderstruck.
That's it. All right, everybody have a great